The following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets, based upon the daily interval, in which I will immediately take you to the outer layers of the weekly and then into zooming in to the 4-hour time frame, and where I believe some pretty significant development has taken place as far as the technical sphere. And it's been quite some time since I've done a video comprised of a technical analysis on Bitcoin, and we're going to deep dive straight into the charts. I mentioned in my previous video off the 8th of February 2024, we were trading spot price 45,736, and we were at the beginning stages of testing an inverted parabolic uptrend line, and that needed to be successfully defended by short sellers and or bear traders really at all costs. You had technical damage within poured into the technical momentum indicators, growing larger divergences where you could have the beginning stages for an additional sell-off to the downside, where we actually shorted on a break and or backtest of this primary parabolic uptrend line that was good for a double-digit crash to the downside, nearly tagging 382 fibs retracement. Had a beautiful surge, put in two additional left shoulders, had your head, an additional inverse head and shoulder complete bottom, and it was going to test upon, call it a dual price resistance level correlated with the 45,430 price resistance, and that long traders needed to take this daily interval price, called dual price resistance, and the zero fibs retracement out with conviction to hone in on a potential short squeeze setup, and additionally burn out the negative and bearish divergences that were constructing amongst all 3-4 technical momentum indicators for quite some time. And here's the update, where we finally had the initial break off the dual price resistance level and 0.1 fibs retracement, and we ended up putting in a slight shy green candle close breakout above that key inflection point, ultimately short squeezing a bunch of shorts to go off, burning off some of the larger negative divergences off the MAC moving average convergence, and additional price percent oscillator right off that key inflection point. And here we are flagging out. We ended up short squeezing to the upside in the entirety off that key breakout. The top of the trade to the upside was good for, call it 56.94% in gains, close to 57%. And that has been a stellar big move off a bullish bull flag continuation pattern. Beautiful, well-defined, and it more than exceeded expectations on a big move to the upside. And despite the concerning macroeconomic news circulating, including softer than expected retail sales, higher than anticipated producer prices, and an increase in jobless claims, all contributing to potential decrease in rate cut expectations, make sure to watch the video of the Treasury market analysis that I made 3 weeks ago concerning a potential another round and spike of yields, turning our attention right back to Bitcoin, where it's crucial to acknowledge the uncertainty surrounding its future trajectory and rely on technical analysis as our beacon of light, where this time around there are additional factors at play, where London and Hong Kong have recently entered the Bitcoin ETF arena, recognizing the significance of scarcity in this game, where this shift in perspective transcends the jurisdictional constraints posed by the SEC and the United States. Numerous other exchanges are joining in. We're highlighting the burgeoning demand for a product that remains elusive to the masses, where the intrinsic value of this demand may seem straightforward, yet its implications are far-reaching. And I believe we could be at the beginning stages for potential breakout among the 1 fibs retracement here on the much larger time frame within the weekly interval, call it 68,850 price, which you would call price support now. And that has been a major key transitioning, we'll call it multi-year key psychological level with major reactionary highs really across that entire sphere. And we are potentially taking that level out as of now, where the support, where the resistance now becomes support at 68,850. That will be the most telling sign for any long traders and or bull traders to defend really at all costs, to avert further damage that could transpire within the more near-term intervals. Make no mistake about it, right off the 2000 major key trendline support level, off the 2013 major reactionary lows and highs there. And this has been the basis and the all-time big picture in the history of the spot price of Bitcoin. And that has, make no mistake about it, a powerful bull trend that has continued to transpire here if and when some of these key additional levels are taken out, with some key Fibonacci levels and or projections if and when some of the major players could infuse a much larger mega rally to the upside. Zooming you in to the 240-minute interval, and this is where I believe we're at a critical juncture, based upon which would call a rising bearish wedge pattern with major reactionary lows and now a major reactionary high across, potential major reactionary high across the 4-hour time frame, with a potential to close. And we have negative and bearish divergences that are starting to construct and establish amongst all 4 key technical momentum indicators. So damage is undoubtedly being poured into the momentum here within the moving average convergence on a bearish crossover and a stochastics that is starting to pivot to the upside. Long traders and or bulls traders, there is nothing more bullish then a potential false breakdown. Make no mistake about it. This is a minor primary uptrend line breakdown and sell signal, and we are now backtesting, defending the 68,850 price support off the weekly fibs retracement that I just had mentioned previously in this time frame needs to be defended in correlation of this parabolic primary uptrend line with major reactionary lows, and that will be the most telling key duo price support level that would need to be defended at all costs by long traders to avert a potential breakdown sell signal in which short sellers and or bear traders will be salivating at the mouth for a potential all-out rush towards the emergency exit doors. Long traders, bull traders need to defend the 68,850 price 10 fibs retracement in correlation of this parabolic primary uptrend line really at all costs to avert a sell signal and a potential much larger move to go on to re-challenge once again these negative and bearish divergences that have constructed amongst all four key technical momentum indicators, churn health back into the momentum indicators to completely burn out and negate these bearish divergences that had transpired, ultimately breaking and recovering the primary uptrend line for a much larger rally to ensue, where short sellers will have an all-out big rush towards the emergency exit doors.